You are listening to the Critical Mass Radio Show, Orange County's business talk show, focused on exploring topics of interest to CEOs who are leading middle market companies. With your host, Richard Franzi.
And welcome to this edition of Critical Mass Radio Show and Podcast. I am your host, Richard Franzi. This is podcast episode number 1164, and I think we have a good one planned for you. How efficient it would be to be able to grow and invest in your business rather than spending thousands of dollars on your rent. Well, we've invited Greg Dill, commercial mortgage strategist, here to help us talk about a unique and proven strategy that he's developed that can get you the financing you need to get the offers accepted. Greg, welcome to Critical Mass Radio Show and Podcast.
Thanks for having me, Rick.
It's good to have you here. Let's start, before we get into the wonky stuff, let's talk about lending and stuff. Let's talk about you. Do you have an interesting story that you can share with our audience?
Well, I think, like probably a lot of people, I took a circuitous route to my profession. A lot of people, they don't go to school for exactly what they're going to be doing, obviously. And I didn't go to school to focus on being a lender, although I did have some finance background. I've done a lot of things in my life. After undergrad, I went and worked in investment banking and then briefly in the commercial real estate space, but on the capital market side. From there, going back to grad school, I took a completely different route and got my degree in engineering. So I worked more on the logistics and supply chain, and that actually took me out of the country for about 6 years. So I was in Europe and Latin America, Asia, Africa, and during that time, I actually transitioned from engineering to advertising and journalism. So did a lot of sales on the international front, and when I came back to the U.S., I knew that I wanted to be in a business development role, help serve people and help them with their financing and to get them into buildings.
Okay, so Greg Dill, before we get to all that, I got to back you up. You have an advanced degree in engineering? In
engineering, correct. In operational engineering, so supply chain management and logistics. So, I think you have to be a chameleon in this world now. There's a lot of things. I always say I don't know what I'm going to do next. Granted, since I moved back to the U.S. in 2010, I've been doing the same thing and focusing on my market. So it's when I came here, it actually made me sweat to sign up for a contract for my cell phone, and now I have a home, and I don't think I'm going to be moving anytime soon.
Okay, what is it about this area of financing that got you interested? I mean, what is the intellectual stimulation? Because you strike me as the kind of guy that needs to be curious about what you're doing because you've done a bunch of things that are really unrelated. It sounds like so.
Yeah, I mean, I think the big thing is that I'm working with business owners every single day, and every business is different. I just hired a new transaction coordinator, and she's learning the ropes, and every time she says, well, that's different. There's something different with this. And I'm like, yeah, everything is different, which is good. So you get to learn about the businesses, and you get to learn about the whole finance side. So it's actually helping people. I always say it's almost like the American dream is to own a home, but the American business dream is to own your own building. And so I am helping someone fulfill their American business dream.
Well, that's I accept that premise because I work with a number of business owners as well. And the ones who have purchased their building, especially if they purchased it around the Great Recession or shortly after that, they're thinking they're pretty smart.
Yeah.
Because their asset base is so low, and now that's an appreciating asset. Plus, it looks like to me, if you buy the building, you can rent it to yourself, and ultimately you can have a hard asset that whether the business continues forward or not, you've got something that's maybe generational wealth here in Southern California.
No, that's definitely true. How I look at it is it's a forced savings plan for a business owner. They're gonna have to lease a building anyway. Yeah. So why not? I always say I help people stop paying rent. Is it really true that they stop paying rent? Well, they're stop paying rent to a landlord, but what they're doing is they're investing in their future. So every month they're gaining equity on one paying it down, the amortization, plus hopefully in the long run increasing the value of the building. And so once they decide to retire, they can sell the business and keep the building. They can sell the building and the business. So there's a lot of options that they can do if they do think about it ahead of time and get into their own commercial real estate.
Well, this is really interesting. And I do have a set of questions, ladies and gentlemen, I'm going to ask Greg Dill about, but I'm just kind of going off the top of my head because in our peer group meeting this morning, one of the things that we were talking about is when is the right time for a business owner to decide to sell their business. And there were a lot of stories about waiting too long or selling at the wrong time, illness or whatever, and then the value of the business can go down very quickly. So that's no matter how successful your business is, it can become at risk and it can lose a lot of its value. The beauty of owning a building is in addition to the business, you've got this hard asset
Correct.
that many times is going to weather the storm better than maybe your business will.
That's true. And I use a story that just last year I helped out a CPA firm acquire. Two guys left their firms. They acquired another business that was run by 4 CPAs. The business had been running for at least 20 years. They sold it for a good amount. It was about $1.6 million. But once Uncle Sam takes half of that, they're at $800,000 each, right? Within 4 people, that's about $200,000 and that's of 10 years of work. So they got an extra 10 grand every year. If they would have bought their building at that point, they didn't own their building. If they would have bought that 20 years ago or 30 years ago, they would have had a nice payday.
Right. Okay. So hopefully we've got your interest now, because what you said, Greg, about the American dream of buying your house, never thought of it that way. Although I'm a big fan of business owners buying their building, the idea that the American dream for a small business owner, and we have many of them that are listening to the radio show, is to look at the building or a building and figure out how do you become your own landlord.
Mm-hmm.
All right.
Yeah, definitely.
So who do you help? What's your, on the show we like to say, what's the niche that you really are successful in?
Well, my niche is working with business owners. So what they call in the industry owner-occupied commercial real estate. So some people will go in and they'll buy a strip mall, and obviously they'll have tenants and they'll be getting rent every month about that. What my goal is to help the actual business owners buy their own building. And they use it through a main program, which is my niche, is called SBA financing.
Okay.
So SBA financing, I always liken it to FHA, but for business owners. A lot of people know in the residential world, FHA gets you into your home at 3-5%, very low down payment. Well, it's similar to that, but for business owners. So there's a government program that's it's bipartisan. It actually doesn't come out of any of our funds for taxes. It's paid through similar to how they do with FHA financing. But then a business owner can actually acquire their own building for as little as 10% down. Mm-hmm. Usually, if you're going the conventional route, that's going to be at least 25%. So I always give an example of, if you have $1 million building that you're going to buy, it's a lot easier to save up $100,000 than it is to save up $250,000, because that differential, you're going to want to use it for your business, right? There's working capital needs, and it's a little easier play if you're focusing on a 10% than you are 25 or more.
So what my experience, having done the show for a while, is that whenever I have someone in who understands a government program, especially a federal government program, there's kind of a lot that you have to learn to be able to navigate that process. Is that true for this SBA lending? I mean, it's not the average bearer who spends the time to learn and navigate successfully how a lender, how the lender operates.
Yeah, definitely. It's definitely a niche market. What happens with that, I mean, even within my bank, my own bank. So I work at a bank. I always say I work at a bank. I'm not a banker. I'm a commercial mortgage strategist. So how I really help out businesses is looking at it in a holistic approach. So I'll look at this type of transaction. If it fits the needs of the client and it fits in the rubric of what's going to be for SBA financing, we'll usually take that route because of the reasons that I said. But we do have to learn new changes. I mean, they happen every single year with changes about that, and some of them are very, very minute, that if you don't have the right explanation, or you try to go down that path and it's the wrong route, you're not going to be able to get financing. So it always pays to work with someone that's an expert in the field and that can really, really look at the transaction before you get to that 45th day of your financing contingency, when your money actually goes non-refundable.
Okay. So tell me, what is it that you're demonstrating it based on how we're having this conversation, but what makes you unique and in this space? Because I would imagine there might be at least 1 or 2 other people in Orange County, Southern California, who focus on this niche as well. Sure.
I mean, what I always think about is I want to make sure that everything works out from the get-go. So a lot of lenders, what they're going to do, they're going to quote rate. They're going to quote rate right off the bat. They don't know anything about the project. They don't know anything about the business, and they definitely don't know anything about the client. I will not do that until I'm actually fully understand that everything's going to work for them in this particular transaction. I always say that I have a plan B in place. If I can't do something at my lender, I make sure that I put the client in the right direction. That might be in the right direction of a competitor that they already been working with. If I think that they've got a great deal, I'm going to tell them to take that deal. So I think a lot of other lenders don't look at it in that way, and they don't do their homework up front. So everyone's heard of a pre-qualification letter. So my idea of a pre-qualification letter, Rick, is you receiving a letter in the mail from a credit card company saying you've been pre-qualified. That's about it. They found your name. The second step before you can get actually qualified and approved by underwriting, which at that point you actually have to have a signed contract, is what someone will call a pre-qualification, or excuse me, a pre-approval.
Yes.
Well, pre-approval, they've done a little bit more homework. They might have got some of the finances, but if you could believe it or not, on the commercial side, most banks cannot run someone's credit, or they don't run someone's credit up front until you get into underwriting. Well, when you're in underwriting, you've already have a contract in place.
Right.
So that's one part. The second part is most banks don't get proof of funds up front. So they haven't really vetted that you have the money to put down, plus the money for working capital, plus your personal funds to live on. So I do all of that up front, but the third key factor is that I run a cash flow analysis, and this is going to mimic what my underwriters are looking at, exactly to the penny of what they're going to look at and if it really qualifies on a financial basis. So that probably gets back to more of my engineering and finance background.
Exactly what I was
really
thinking.
need to look at that before I'm willing to put my name on something. And most of the commercial real estate brokers that I work with, and a lot of the CPAs and different people that are within my strategic partner group, know that if they see my name on something, I've really done my job vetting it, because I don't want the other side to see something come the next transaction and say, did Greg really do his homework on this, or is he just trying to give someone a deal so they can get into contract? I don't want to waste anyone's time, the client, the brokers, my time, the seller, anyone involved in the transaction.
So in Southern California, you service Southern California?
I do. Well, I service Southern California, mostly where most of my transactions are going to be in Orange County and Inland Empire.
Okay.
I also work in Los Angeles and San Diego, typically where I can drive to if I really need to.
Right.
But I can work along the coast, where my bank will work from California, Oregon, and Washington, sometimes in Arizona, sometimes in Nevada, sometimes in Texas. But what I also have is affiliates. So like I said, if I look at something and it doesn't work for me, whether it be geographic, whether it be strength of a transaction, type of a product, I do have outlets to help that client in if I need to go to that plan B.
Okay. So a couple questions again off script. Is there a lot of inventory available to purchase in those? Let's stay in Southern California.
There's really not, and it seems to be the song of the day, but the song of the day has been going on for 5-6 years. It's getting tighter and tighter. Most of the owner-occupied space, which I see, is in the industrial market, and they're getting away with a lot of the industrial pieces around here in Orange County. Yeah, they can move a little bit out in the Inland Empire, but now it's in terms of actually having a build there. But I was even talking to a commercial real estate broker up in Portland this morning, and he says that it's almost no different than what it is here. As soon as something comes on the market, there's multiple offers. So what I want to make sure is, if I vetted a buyer up front, vetted the client that they're going to make an offer, I make it as close to a cash offer as possible by saying, we've done all this homework, we can get in and actually close this transaction. So what I call a field underwrite approval is about a 5-page document that outlines exactly what we do. It shows that we've run credit. It shows their proof of funds, and then it'll be the typical type of pre-qualification or pre-approval letter within there, and then some of the credentials and the steps that we've taken to put our name on something and stand behind it.
So the parallels with the housing market are uncanny here as we're talking, Greg, because you mentioned a cash offer. Are there outside investors who are coming with all cash buying commercial buildings in this market?
There's definitely, there's definitely all cash offers. So and it's not necessarily just investors doing it. There's business owners.
Okay.
There was a lot of foreign money coming in as well, and so I can't compete with a cash offer. I can't give financing on cash, so that doesn't really do much for me.
Right.
But obviously, if you can, usually cash offers are going to be lower than what a seller is actually listing. So if you can convince them to go with your client because you've done a thorough job, they're probably willing to wait that 45 or 60 days of the escrow period to make sure that they're going to get
You're
higher,
taking the risk
higher
off
price.
the table for them.
Correct.
Okay.
Correct.
Because if you got the cash, that deal's going to go through.
Yes.
Right.
Yeah. That's true.
Okay.
That's true. Well, in theory.
Right.
They can make a cash offer,
right,
but that doesn't mean that they're not going to get financing. They could still negotiate a certain amount of contingency period and an escrow period, and then actually be looking at the financing. So I always let the let the clients know that, and let the brokers know that as well, that just because they're making a cash offer doesn't necessarily mean that that's going to go, because there's a lot of horse trading at the end there, and you don't want to get in that either.
So we're talking with Greg Dill. He is an expert in this area and seems to have a great passion for it, which is pretty obvious. I'd like to switch gears just a little bit here on Critical Mass Radio Show. Unintended Consequences, my latest book, Killing Cats Leads to Rats, all about unintended consequences of strategic business decisions. Have you had an instance where you had an unintended consequence from a decision, and can you share one if you can think of it?
Yeah, I mean, I think one thing I mentioned to you about competition. So when I talk to strategic partners, referral sources, normally commercial real estate brokers that are introducing me to their client, a lot of what I hear all the time is they already have a lender. They work with a bank. I understand that every business owner is going to hopefully have a bank account, hopefully have a banker that they work with, but that doesn't necessarily mean that banker is looking out for them. That doesn't mean that they're actually going to be able to do their transaction. So what I've found out in just the years I've been doing the business is, if I can help someone out, I'm going to make sure that I help them out. If it's me directly, if I have to go to that plan B and use some of my other affiliates, but also if it's competition and they have a great deal, I'm going to actually let them know to go forward with that. I might tell them the pros and cons, but if they're just looking at this one aspect of it, I'm not going to lose my relationship with a referral source, with my strategic partner, over one transaction. And I think when you show that you care to the actual end user, the business owner, he might start to think, well, this guy's a little different here. Why is he telling me to go with the competition? Well, because maybe in that instance, it is the best thing for them to do. But the next time, they're going to remember me and say, this guy was frank, he was upfront, he was honest, and I'm going to want to work with him in the future. Yeah,
it's so rare to have somebody suggest you go to a competitor or consider another product or service. I mean, that does cause people to take notice, right?
Yeah, I mean, I say I have to sleep at night. There's a couple things I believe in, and one is what I call deal karma, and that's take the phone call from someone, help them out. You don't know if you're going to be able to help them now or in the future, but if you treat them right, it'll come back to you. Maybe not in that transaction, but maybe in another one.
I agree with that.
And the other is just basically doing the right thing is always the right thing. So if it's sort of like, if you don't lie, you're not going to have to remember what the truth was, right? So it's just making sure that you're always doing the right thing for your client, for your strategic partner, for yourself.
Okay, but your focus is really helping people get qualified through the SBA and the programs that the SBA is offering.
SBA is a niche market, so I can do conventional financing as well.
Right.
But SBA for business owners, usually when they're purchasing their first building or even multiple buildings, because it's not unique to the one building. They can actually do multiple buildings with that. That is my focus, because that's the easiest way for business owners to take advantage of acquiring a building at very low down payments.
Right. And are they so what would be, if someone's listening out there and they're going, well, I don't know if I could qualify for an SBA, or maybe I think it's like a big hassle or something. What's the right kind of person that you find that you think you should be in an SBA program? Does that make sense?
Yeah, well, definitely. I mean, it's someone obviously that wants to own their own building.
Okay.
They're in or should. And most business owners, like we talked about earlier, probably should own their own building.
Yeah.
Right? They've probably been in business for anywhere from 3 to 5 years. So we require that we're looking at their last 3 years of tax returns.
Okay.
So it's their business and personal tax returns, if they have other investor type tax returns. But there's two parts. There's the standalone, which would be the business and how that looks financially, and then we call the global, which includes the income that's coming for them individually. So,
and you're looking at all that to assess their ability to make the payments.
Make the payment, exactly. Well, a little bit of both. So what they're doing is they've been leasing for a number of years now. Well, that lease, when it's going to come up, they can transfer that, and that's going to now be their mortgage payment. So we call it a rent replacement. Mm-hmm. So they've been renting X amount for however many years. We're looking at their monthly payment, and then we'll net that from whatever their mortgage payment's going to be to make sure that they still qualify on their coverage ratios and their cash flow.
Okay, and working with the SBA, you've obviously know how to get that done. I think sometimes when I talk to small business owners, those 3 initials SBA sound like, oh, that's a lot of work, or I don't know if it's a
True. Yeah, I mean, when I give talks, I that's how I start out. Who's heard of the SBA? Who's heard it's it's a headache? Well, I think it used to be, and it does matter who you work with.
Okay.
When another client, when a client's working with someone else, and I ask, oh, I'm already working with the SBA. It's been this. well, I ask them who that is, because if they're doing a good job, I probably know who that person is.
Okay.
And it does matter, because if we're out there trying to help business owners, I always say that they should really be focusing on their business, not focusing on filling out paperwork, not focusing on signing documentation. Yeah, they're going to have to do that at the end, but I want to take all that off of their plate, work with their CPAs and their accountants, get their tax returns on that side, so they don't have to focus on that. My goal is to put everything together for them and have them review and sign.
So it seems to me interest rates are going up. Does that make a difference to you in what you're doing?
Yeah, I mean, I think it does.
Okay.
There's a, the interest rates have been very low for the last number of years.
Right.
They're still historically low.
But we're spoiled.
But yeah, exactly. But also, obviously, interest rates have gone up, and so have values of property.
Yeah,
so
that's like a double whammy.
It's a double whammy, exactly. So I think a lot of people are going to be priced out until maybe some of the properties are going to be listing at lower prices.
Okay.
So every quarter point, every half point, every point of an interest rate is going to have that many less people not being able to qualify.
Okay.
Because that's going to obviously bump up whatever their monthly mortgage payment's going to be, and with some of the ratios that we're looking at, they may not be able to make the cut. But one thing that I find from working with small business owners, most of the time they're in the business on their taxes of tax minimization. So they're trying not to show a profit. And a lot of times I'm working with them during their extension period on their tax returns, and we have to find out a way to show that they actually are making more than they are. And what does that happen? A lot of it has to do with some of the expenses that they're putting through, or at the timing that they're doing it.
Right, timing.
So
yeah.
a lot of times I'd like to say that my favorite answer is yes. The best is a quick no and an alternative to help you out.
Okay.
That no might be no now, but yes if. Yes if we do this. Yes if we work with your CPA. And sometimes I'm working with clients over a number of years, 2, 3, 4 years, before they can actually get in their building. But I'll take a consultative approach to that and talk to them every quarter to see where they are with their finances and how much they've saved up, but then also where they're going to be once they file their tax returns. And I always have their CPA send me their tax returns to make sure everything pencils out before they file them, if they want to do actually want to acquire a building within that year.
So is the triggering event, oh, your lease is coming up, I should think about buying it? Or is it like, my lease is coming up, I think I should consider alternatives to releasing this building? Maybe I could go buy something somewhere and do. Is that usually the triggering event for the client? Their lease is about to expire, and so they have options now?
It can be, yeah. That can definitely be, especially when they've, a number of years ago, like you said, they've got in at great prices, whether they bought the building or they actually were leasing. And now when it comes to the market, leases might be 20, 30, 50% more.
Right.
So then they start scratching their head saying,
holy heck,
hey, yeah, I should
for that price.
definitely think about it, because it's not that prices of properties are going up and lease rates are going down.
No.
So it's definitely one of the times that they should think about that. But they shouldn't think about it a month before. They should be thinking about this a year or two ahead of time.
Right.
Like I said, to make sure that everything pencils and that it works out from their tax returns.
There's really no downside to having a plan to be able to buy a property as a business owner. I mean, it takes a little bit of your time, but you're willing to help the qualified kind of people think for the future. Right? This is the kind of thing you don't want to do at the last minute either.
No, you definitely
don't need that pressure.
With leases as well. And typically, you have to renew your lease and start talking about it within 6 months. Every commercial real estate broker is going to want to make sure that he has you talking. He has you talking with him, so he can talk with the landlord within that time. Because if you can't come to an agreement and you need to move, you don't want to be put to the coals right at the end there.
I love the fact that you've, in my mind, made it. You've cemented this concept. If you're a business owner and you have a house and you own at least one house, if not a rental property, you ought to consider about buying the house for your business as well, because the benefits seem to be similar to what they are if you can swing it to buying a home.
Definitely.
Okay, so hopefully we've created some interested business owners who may want to buy a building in the future, which I think is awesome. It's good for everybody to own property, I think. There's no real downside to this, is there? What am I missing?
I think in the long run, obviously, if they're if they're in for it to try to, it's like someone buying a house. If they're into to flip the house and you get at the wrong point, it can be detrimental.
Yeah.
But if you are in there for the long run, your business is gonna be going on for a number of years. That's your plan,
right?
It's sort of like the stock market. You keep investing in it. You don't look at the blips up or the blips down, you go for the long haul, and after 20, 30 years, you've actually owned this property now. You can utilize it as your retirement plan.
Exactly. So, Greg Dill, if someone would like to contact you to learn more about this whole concept of a commercial mortgage strategist, how do they find you? Where should they go online?
Well, online, it's probably best to just look me up on LinkedIn. If you look up Greg Dill and the
How do
SBA,
you spell that?
It's Greg,
Okay.
D as in David, ILL, and you can look up Greg Dill and the SBA Lender. I'm sure you'll find it. It'll also probably be on Rick's website as well. And feel free to give me a call or send me an email anytime. Love to help everyone.
Well, thank you for your time and a very illuminating conversation in 20 minutes. We covered a lot of ground.
Yeah,
Thank
definitely.
You.
Thank you very much.
I enjoyed it. Thanks for being a friend of the program and a part of the Critical Mass community, Greg Dill.
You're very welcome.
Okay,
thanks for having me.
You're welcome. Thanks, Paul Roberts, for your help in engineering this program, and for our three producers without whom we could not do the show. They are Joan Park, Crystal Nunley, and Haley Stern. If you'd like to connect with me, let's start on LinkedIn. I'm Richard Franzi, Franzi. And until our next show, I hope all of your business decisions will move your company in a positive direction.
You have been listening to Critical Mass Radio Show Business Talk Show, focused on exploring topics of interest to CEOs who are leading middle market companies. With your host, Richard Franzi.
Imagine what it would feel like to lose everything: your job, your home, your family, your dignity. This has happened to thousands of the men, women, veterans, and young adults we serve at Working Wardrobes. What do we do to help? We provide career development services, life skills workshops, job skills training. We provide the perfect interview outfit.